All right, what's good, everybody? Happy Tuesday still. Tonight, by the way, if you're going to join us, we're doing our open house wine and wealth class for free for everybody. If you want to join us, if you're one of our customers, you got an email. If you happen to be on our email list for some reason, then you may have got an email as well. We don't make a habit of emailing people that aren't our customers, but feel free to stop by. It's going to be live here, YouTube, at 8 o'clock. I believe you can go ahead and prepare for the alert or whatever if you just search for it on our channel. We're going to cover what happens if you bought the markets at the absolute high during your retirement investment. We're going to use actual numbers. We're going to go through the whole thing, top to bottom. Hope you enjoy, and if you can make it, come on by. 8 o'clock will be that class. Otherwise, check us out at Jazz Wealth. You can see what we do. We manage retirement or long-term investments for our clients, and a lot of good things there. We got our portfolios posted, always with our performance. You can also check the events to see what other events we may have coming up that you may be interested in. But today, you're looking at the markets. How'd the markets do today? So we're going to go over that here with you. Let's get started. So on the screen, we should see a chart popping up here soon. That is the Dow. The Dow was higher on the day by 143. The S&P gained 10. The Nasdaq was higher by Nasdaq 100 was higher by 30 on the day. Earnings. Big focus today is earnings, and will be continuing to go forward. It's a high expectation season. Last quarter, the S&P returned earnings growth of 24%. Great quarter for earnings. And so this quarter, their analysts are expecting 20%. So they set the bar a little bit lower, but still a very high bar to try and reach. So you're going to see a lot of that in the markets. Now, we take a look at the overall markets here, the S&P, the Nasdaq. You can see that we've had a nice run higher. If you're not familiar with what these are on the charts and you're one of our customers, we just did a class for you guys on candlesticks. How do candlesticks work? That was our last Tuesday's Wine and Wealth class. So now you have a better understanding of how these candlesticks work. In particular, the last 3 days. Very strong. We highlighted what those candlesticks mean. And basically, think of it as the market breathing. I always say breathing in, breathing out, breathing in, breathing out. And so you've got this recent breathe in, right? And so it would be totally normal if the markets took a few days to pull back. You now know that if the markets fell for the next few days or even for the rest of the week, it really wouldn't be anything to freak out about unless it erased everything that we just spent the last couple days trying to achieve. So markets currently breathing in and taking a little break. Now after hours here, the markets are closed now, but the futures markets are selling off rather aggressively. It appears that there's some kind of tariff news or something may have just come out. I haven't checked the news just recently, but markets already starting to pull back going into tomorrow. Now, like I said, earnings will really be the focus here. You've got tech stocks. You've got banks that if you look at the individual earnings expectations, the bar is set so high for these guys. One small disappointment could really send those sectors pulling back, which we know that the tech sector and the banks is what you need to make the markets go higher. So if you think about it, if we look at the banks here, we'll look at the big banks, they have underperformed. So taking a look at this chart, you go, well, look, I see what the stock market's done, but I see the banks are lagging behind. This could be just the catalyst they need to participate with the markets, which would further fuel the rally, maybe push us back to highs. If the banks disappoint, which we're going to know starting in just a couple days, then that could really spell a downward push here in the market. So in my opinion, we're really relying on the bank's earnings coming up to see what we can expect really through the end of the summer. You do have JP Morgan reporting earnings later this week. They're the first to go, I believe. So that'll be coming out. They've also underperformed. And you have Wells Fargo. Wells Fargo's kind of picking up lately. A lot of great analyst upgrades over the last week and a half. So Wells Fargo's trying to recover a little bit, but they'll have earnings coming out later this week as well. Okay, let's go over to the sectors. Individual sectors have done well. The consumer staples sector, that is what you see on the charts. That was your best performing sector of the markets today. It continues to move off the lows. You could just kind of see since the beginning of May, a slow move off the lows. Typically, money moves into this sector when people get a little cautious about the markets. They want to focus on the staples, meaning the products that you will buy, whether the economy is good or the economy is bad. Now, to kind of highlight this today, what we had, I'm going to just take a second and come over here to the screen. The reason why consumer staples were higher today, you want to always look at that. You go, Was it higher because people are expecting that the economy is going to soften and then therefore that's a safer investment? Or were they higher because just a few names happen to do really well? Well, if we dig in there a little bit into the consumer staples sector, we find a couple names. We find Procter Gamble, we find Coca-Cola, and we find Pepsi. All good days today. So those three names, let's go back to the charts real quick. If we pull up, we'll start with Procter & Gamble. Procter & Gamble, 2.5% gain on the day. You can see that big rally today. Coca-Cola, that's obviously a consumer staple. People are going to buy Coke, whether the economy is good or bad. 1.25%. And Pepsi being the main contributor to this rally today, it was up 4.75%. They had great earnings. Revenue expectations, everything was really, really good for them. Here's the thing. If we go take a look at the consumer staples sector, which is the XLP, if you follow that ETF, you find that about 12% is Procter & Gamble, about 10% is Coca-Cola, and I believe 9.8% is Pepsi. So you got over 30% of that entire sector moving higher just because of those three names. And we've really highlighted that lately because I believe we were the first to kind of point this out to you, that the stock market is really, the performance is coming from a handful of stocks. And so I won't draw it again because we've already talked about it, but those FANG names really leading the way. Well, wouldn't you know it, I happened to be looking today, it was on Bloomberg, I believe. They said you've got Amazon, which is AMZN, Microsoft, Microsoft, Amazon, and then of course Netflix. Uh-oh, we're losing this thing here. They said, and they did their study a couple days after us, isn't that kind of interesting there, that these three stocks are responsible for 71% of the overall S&P 500 gains, 78% of the Nasdaq. So we've got S&P here, 78% of the Nasdaq, all because of those, wow, that's beautiful, all because of those three names. What did we just say the other day? That 84% of the market's gains came from these 5 stocks, right? Facebook, Apple, Amazon, Netflix, and Google. So now other people are starting to notice, well, wait a minute. The markets are doing okay, not great, but they're doing okay because of these names. And then if we look at these 5, now we're at 84%. We've been saying that for like the last week here. So people are starting to pay more and more attention to that. I think it's something you should pay attention to, because when those 5 stocks have a bad day, or if 2 out of the 3 plus one of these struggles a little bit, maybe Microsoft, you're going to notice the market suffer a little bit, and it's just going to be profit taking. It's not going to be panic. It's not going to really be anything else, just going to be profit taking. So you got to be prepared for that. When you see the markets fall, we're going to come back to that and say, was it the whole market, or was it just people taking profits out of that group of stocks, okay? So moving on here, we talked about the banks, JP Morgan, Wells Fargo coming up here soon as far as earnings go, so we will cover that when it happens. Pepsi reported earnings, obviously very good. The stock just killing it, doing really, really well there. You got Wynn Resorts in the news here today. Wynn Resorts was actually upgraded, was it? Yeah, Stifel Nicolaus upgraded the stock today. They said that this recent pullback here presented a unique risk to reward opportunity, and that's just fancy way of them saying we're buying the stock. We like the stock here. We're inviting our customers, or whoever they are, or their customers are, to buy the stock. So the stock was higher today by 3.25%. Remember, it's been falling ever since the whole Steve Wynn sexual allegation things that took place there. We'll go over to Chipotle. It's never a day I don't take a look at some Chipotle stock. I love Chipotle. Not the stock, but the food. Anyways, the stock was lower today, finished down by 2%. There was an analyst that pointed out, hey, this recent gain, right, from low to high is about 80%. And they said, we think that's a little bit too far, too fast, considering that the profit margin is still so tight. Yeah, they've got a new CEO, but revenues are a little bit lower, and they're still working on sort of a recovery of sorts. And so I took a little look into it. Chipotle has a 4% net profit margin, which is just not going to support any growth going forward. So any little hiccup in the economy could be rough for Chipotle. So keep that in mind if that's something you're working with. Walgreens, Boots Alliance. So this stock yet again downgraded. It just keeps getting downgraded, really. The stock tried to recover for a few days. There was an analyst that came out and said, hey, wait a minute. Amazon bought PillPack, and they basically piled on to the argument that Walgreens, CVS may suffer a little bit more Walgreens than CVS. Maybe we'll do a video on that. But so Walgreens lower again. Remember, it just got added to the Dow. So when you got Walgreens, a new Dow component, remember General Electric had this tiny little weighting on the Dow. Now we've got Walgreens in there, more of an impact on the overall Dow. So that certainly did not help today. And then in Trump news, Pfizer, the stock was actually higher on the day. Pfizer officially responded to President Trump's tweets the other day, yesterday I believe, that Pfizer was ripping people off. They were charging Americans more and then discounting to other countries. And while that may be true, that part of it is true, Pfizer was very crafty in saying, hey, actually prices have stayed the same for most of our drugs and gone down for the other drugs. But of course they were referencing the United States. They weren't referencing the world, where in reality, the Americans, us here, we pay for all the R&D that everybody else gets to be afforded the privilege of buying cheaper. So looks like Amazon's going to take care of that. So I'm very optimistic about the Amazon, JP Morgan, and Berkshire Hathaway deal. Love it, love it, love it, love it. What else do we have for you? Well, let's take a look. Let's go back to the charts there. A couple stocks in the news also. Tesla was a little bit higher today. They said they're going to build a plant in China. They're going to build 500,000 cars a year. Big numbers, big lofty numbers. Of course, he's known for doing that. You know, we'll see what happens, right? I mean, it's easy to throw out big numbers of what you're going to do. Tesla says they're going to do it. We'll see what happens, but the stock was a little bit higher. Continues to struggle at the 360 number. So if you're a technical trader, you are not convinced that the stock price is going to go over 360 anytime soon. Other news, home prices in Washington State up 13% year over year. That's a record. That's the best performing state in the whole country, believe it or not. Manhattan's starting to suffer a little bit, and of course the state of New York. But Washington State is the hottest housing market in the U.S., so congratulations if you're out in Washington State. Things, your home prices must be doing pretty good. Other than that, CNBC did a study. They do this big thing once a year. I think it's every year. The best states for business. Texas ranked #1. Washington State, interestingly, came in second. Worst state was Alaska. And then I think it was Mississippi was the second worst out of all of them. So, if you care. And then also Apple. The App Store turns 10 years old today. So that App Store is 10 years old. I read an article that said, hey, what was the most popular app in 2008 for the App Store, the first year that it came out? You know, my mind went to like Facebook, you know, maybe that was the most popular app. But in reality, the most popular app that was downloaded in 2008 was called Koi Pond. It was a 99-cent app. You paid $1 for it. And basically it played sounds from a koi pond. So how weird is that? We've come a long way, huh? So that's that. Anyways, we'll wrap it up there. We'll keep it really short today. Tonight, 8 o'clock, just a few hours from now, we're going to go over that class. I hope you'll join us. Normally something we only do for our customers. Today is going to be open house. Hopefully they won't be too mad at me. But if you want to see some of the other classes we do for our customers, check the events tab on our website. You could also subscribe to it. I think you just click a button and it'll alert you when we do any classes for our customers, if you happen to be one of them. If not, check us out. Give us a shot. jazzwealth.com will help you. Take a look at our portfolios. Happy to work with you, and maybe if you want to schedule a call or whatever you'd like to do, we're here for you. So Elliot in LA, how's it going in LA? Love it. Beautiful. Well, we'll see you later. Be sure to go to look up the Wine and Wealth thing on the channel. I think you can get set up for it or whatever, and the alert will go off when we're ready. Enjoy the rest of your evening. Enjoy dinner. We'll see you back for a glass of wine, and see you then.